Okay, hello everyone. First I'd like to apologize for not having a live webinar because yesterday I wasn't feeling very well, was coughing quite a lot, so it's quite hard for me to speak to. Hence, I did not have a live webinar yesterday. Thus, I'm doing a recording today instead, and this is so that you will still have something to listen to or look some reference for you to plan for the coming week lah. This session will be quite short also, as I don't really have any new trades or new setup to update. Mainly you can see them all in the Patreon trade setup already. But one extra thing I would like to share is that if you all notice the Patreon post, I have investing note portfolio. So this investing note portfolio is of course all the trades that I have executed, which you can see from this trades Google Sheet. So the investing note is reflective of all the trades that you see here. Most of the entry points, the stop loss, the profit target, mostly is the same. But of course, profit target have to be taken with a little bit of grain of salt because as I mentioned here that as I have mentioned many times that profit taking strategy is very is part of it's a core strategy that we use in the Nimbus capital trading course lah. Hence I do not really wish to reveal too much, but you can of course take a look at the portfolio and see what's going on gone over there lah. And if you can figure it out from there, then good for you also. But I just because I do receive feedback that just by looking at these charts alone is like not really informative. So you can actually see here that so far I have 8 profits, I have 5 losses, and I have open position of 9. But actually, this isn't a very good or rather a very accurate representation because although I take profit, there are a lot of positions that, as you know, I don't fully take profit. So what does take profit actually mean? So just so everyone is on the same page, right? On this read here first, I do explain that the moment the first TP level is reached, it is considered profit because the first TP level is designed in a way that you will at least get a 1-to-1 risk reward ratio. And of course, if you with a 1-to-1 risk reward ratio, if you win more than you lose, if your winning trades is more than your losing trades, you are definitely going to be coming out profitable. Which currently I am right now with a total of eight profit, 5 loss, and 9 still have 9 open position running now. So in a way, you can see it much more reflected here on my investing note portfolio. Up to date currently for the first 3 months, Q1, quarter one of 2021, my portfolio have returned close to 17%, 16.5% on my total position on all my trades. So I'm not really sure what this 8.3 total return, how is it calculated? And I don't think this chart here is very reflective of the performance of the portfolio because I have no idea where is that 8.3% come from lah. Because I started out with I started out with 100k, and I have a unrealized position of 10k in profit, and I have a realized position of 6k in profit, and which gives me about close to 17k, which is about 16.5% return for the first 3 months lah. So you can also see here that on my close positions, you can see I make a loss on AEM, blink charging, life sign tax, MMG. I mean all those stuff that you see on Patreon lah. Okay, so this is something new that I want to share, and it's nothing big lah. So suppose if you guys are following the same trade plans and you somewhat and it's not doing well, right? Then maybe you might want to sort of compare and contrast, take a look a bit. Maybe you are entering too many lots, you are not really following the trade plan, I'm not really sure, but at least there's additional info for you to compare and contrast lah. So taking a look at the market, right? Everything is still I would say bullish. Last week was still considered bullish for most of the indexes. Like you can see that S&P was up the first 3 days, but you can see that on the Thursday and Friday it sort of retraced a bit. uh, Same thing for STI, but once again, STI proved to be among the more bullish indexes, the among the more bullish index lah, where you can see that it was pretty stagnant for the first 3 days, but we have a good I would say price gap up on Thursday and sort of maintain there lah. So we are really coming back to the pre-COVID level already, which is around last year February, and you can even see that for DBS, right? DBS is actually leading the charge among all the three banks. We are way beyond pre-COVID level, and in fact, we are quite close to the previous high level, considering that UOB is still quite far behind. UOB just recovered to pre-COVID level, and of course, OCBC have overtaken the pre-COVID level, but its previous high is still a long way. So DBS is doing extremely good with the current recovery lah. But on the other hand, what you have is that HSI seems the Hang Seng seems to be the weakest among the three markets, and it is still hovering at the support there. But of course, as long as this support is not broken down, right? I will still consider this bullish, but at the moment, try to focus on Singapore and US market for now instead of trying to go into Hong Kong unless we have a very bullish candle coming up first. Until now, not really here, which is why you can see that for the Hong Kong, the tech on the OCBC Lion Hong Kong tech counter, right? We are also stuck. It is just that here we have a established support, and of course we took a gamble on this trade, took a sort of gamble on this support lah, where if this is truly supported, right, we are in for a very good ride when the whole thing recovers lah. So overall, the market is still bullish, even though there isn't much new entry coming in, right? You can actually take a look at some of the trade setup that were posted previously. Some of them had hit quite a good price level that you can choose to enter. So let's look at some of the counters. You can see that First Resources is starting to has found a base here and starting to recover a bit. But of course, if you are looking for a much more counter with a higher ROI, maybe Golden Agri might be a better choice, because you can see that is trying to break up further lah. And Golden Agri is a much cheaper counter, and at 20 cent, right, 20 cent counters are the best counter to trade, because every pip is worth a lot of profit in terms of percentage lah, whereas expensive counter not really. Hence, if you are looking to trade, right, I will say Golden Agri will be a better choice compared to First Resources. And of course, there are also other counters such as Fortress Mineral. Fortress Mineral initially had a rally, but now we have quite a bit of a retrace. But we are looking, hopefully, it will be good. It will find a support there and goes up further also. Next, we have counters such as iFast is still managed to find a support, but going sideways and building the base before it start to go up. You can consider that also. But if you doesn't like iFast, in fact, Franken recovered extremely well. Initially, the trade setup came around here. It retraced a bit, stop loss was here, but now it recovers, and it seems like we are looking to break forward. So iFast is an extremely good counter as well. And recently, of course, some power here, some power also found a support and is sort of doing a sideways dance a bit, testing for supply. If the supply doesn't come in, then I think it is good to go forward also. So a lot of counters that you see here, a lot of open position counters, right? They are just waiting for that bullish moment to swing aggressively upwards lah. So it is very important that at this time, try to have as much patience as you can, not never ever prematurely exit a counter to chase another counter, because if you prematurely exit a counter, you are assuming that your current counter is never going to run, and the new counter that you are chasing is going to run before your old counter runs. So that's a lot of assumption that you are making in one decision, and most of the time all the star doesn't align to make that decision a worthwhile decision lah. So what trader often face is that they exit counter to chase another counter, they chase here and there. Eventually everything will run, but they did not catch any because they are chasing here and there. And what happened is they end up paying a lot of brokerage commission, the brokerage commission instead, with all the chasing non-stop lah. So you can see from my investing note that I currently have quite a lot of position, and you can see my cash allocation is I have employed 98% of my cash ready. I only have 2% left as cash. So basically, no matter how big capital you have, right, eventually you are going to run out of cash. Eventually you are going to run out of nothing to do. So you need to make sure that you are extremely disciplined in holding your position as long as your trade plan is still valid. With that said, right, I think that's truly all for this session lah. But going forward next week, depending on how the market is on the Monday session, right, we will definitely have some more trade setup coming in lah. And also this week there were 100 over counters on the US scanner, but that's nothing to be really worried about. It is due to the triple witching event, where a lot of options are expiring and a lot of them are being exercised. So there was a increase in activity, hence it does tend to throw the scanner off lah, when this triple witching and quadruple witching event occurs. So aside from that, I think things are looking quite good. If I look at it, right, even 9天 seems like it managed to find a base. 9天 even seems like it managed to find a base here, and I think given the current price, the second entry to the stop loss is much more attractive compared to the original entry here lah. So you, for those who are who like a riskier play, like a more reward play, perhaps this could be a counter that you can do also. You can make also, but of course, you can see that among all these counters, right, I don't really recommend counters like Singtel lah, StarHub lah, all those counter. Yes, sometimes a lot of people ask me, how is Singtel can buy or not, can buy this or not. As long as sometimes people get attached to counter for some reason or another. I'm not really sure why. I don't get attached to counters. I only buy a counter when it fits my, when the chart fits my trading criteria. So if the chart doesn't, the counter name can be blanco out altogether when I'm trading. I don't really care what I'm trading. So eventually, as long as the chart fits the criteria, I will buy. If the chart doesn't fit the criteria, I wouldn't buy. I would not think in the perspective of maybe it's time to look at Singtel or maybe it's time to look at Thai Beverage. I don't look at company names. I look at the chart. So if you ask me why I'm not putting up certain counter, because it's as simple as they are not attractive, they are not coming out on my scanner, or like why should I trade one counter when there are so many other counter with bigger potential to go up, whereas Sintel is a downtrend counter. So yeah, so that's basically my trading style lah. So going forward next week, I'm still bullish. You can look at some of the open trade setup. You can revisit them, and then if you are holding most of the, if your majority of your position is in trade ready, no more cash ready, then all you have to do is just sit back and just relax. I think we are still good to go for next few week of bullish up move lah. Okay, thanks everyone, and have a good trading week in the coming week.